Hey guys, welcome back to the channel. My name is Christian Cicada, and in this video, I'm going to be giving you the top 3 formulas everybody should know. These 3 formulas are used by millionaires, billionaires, to make sure their wealth, their richness, their money is always secure, that they're always generating cash flow, okay? These formulas may sound so simple to most of you, but if it was so simple, then everybody will be executing on it. So in this video, I kind of want to go into deep explanation to what these formulas consist of, what they are, and explain to you how you could use them in your everyday life to make sure we are all financially free, okay? This is financial independence, financial freedom, financial literacy 101. Let's go. All right, guys, the top formula that everybody uses to make sure they are rich, stay rich, and become wealthy is basically having more assets than liabilities, okay? But when it comes to assets and liabilities, there's always 3 different formulas, okay? And there's where a lot of people get confused, and there's where a lot of people get stuck, okay? It's that simple. If you have more assets than liabilities, you will become financially free, okay? But let's go into a little bit into depth. Let's take it back to Rich Dad Poor Dad. An asset is basically anything that's putting money in your pockets. A liability is anything that's taking money away out of your pockets, okay? So let's just look at these formulas. If your assets are less than your liabilities, that equals poverty, okay? That means you're not generating enough cash flow. You're not generating enough income or money in your pocket to pay your expenses, your liabilities, okay? That equals poverty. That's how people become lower class or stay lower class. And even though they want to break through, they never build up their asset column to make sure it outweighs their liabilities, okay? That's formula number 1. Formula number 2 is if your assets are equal to your liabilities, it equals middle, okay? When I say middle, that means mediocrity, middle class, okay? Because if your cash flow is just breaking even with your liabilities, you're really stuck. You're not really moving up and down in the graph. You're not moving up, and there's no way to build up if your liabilities are the same as your assets. Your assets are the same as your liabilities, okay? You'll stay stuck in the middle. And there's where a lot of people mess up, because they have no idea what exactly is an asset, or they get confused that they think these specific assets are good for them, but they're actually liabilities. I'll get more into depth to that later on in the video. But this is the most important formula. If your assets are greater than your liabilities, that equals freedom, okay? If your assets are paying for all your expenses, that means you're having a little bit more income, you're having a lot of cash flow in your pocket. You got money to grow. You have money to save, invest, reinvest. You can use your money to just work for you. When it comes to money, when it comes to growing as a person, to becoming financially free, you need your money to work for you, okay? You should not work for your money. Always have your money working for you. That's the most important employee anybody will ever have, is money. You have to know how to control your money. You have to make sure your asset column is outweighing your liabilities, because the more assets you have, the more cash you will have to make sure you are financially free. And that's the most important lesson. So now when it comes to assets and liabilities, let's take it a step further. What exactly is an asset and what exactly is a liability, okay? When people purchase a car, people think, wow, this is the most wonderful thing I'm gonna use, the most wonderful thing I'm gonna buy this year, the next 2 years. This is the most beautiful asset I could have. That's completely wrong. You are wrong, okay? A car is a liability, okay? Why? Because number 1, you need a down payment for your car. You're gonna be paying it monthly, and your insurances, gas expenses, maintenance, etc. Though this is a liability. The moment you drive your car off of the lot, you lose 10%. Within the first year, you're gonna lose 15 to 22% the value of your car. You're gonna be depreciating the value of your car, okay? So nothing when you purchase a car is an asset, because an asset has appreciation. An asset gives you cash flow, okay? When you have a car, you have no cash flow. You're throwing your money away into stuff that you don't know and you have no control over, okay? This is a liability, car. Next, here's where many people get confused, and this is a very critical thing that everybody should know, okay? When you own a home, that is not an asset. That is a liability, okay? Why? Your home. It's a liability. Why? Because you have to pay mortgages, you have to pay maintenances. You have to make sure it's up to par every single day, every single year. If there's a leak, guess who has to pay for it? The homeowner, which would be you, okay? You have to make sure your home is up tidy, to make sure it's good and all about. You have to pay your mortgages, your taxes, insurances, etc., for your home. Your money is being thrown away at your home every month, every year. These expenses for your homes could vary. This is probably the biggest question mark when it comes to liabilities, okay? Your home could at any given moment could depreciate in value. Yes, it could appreciate, but at the same time, the appreciation will never outweigh all the expenses you will have in your home. Liability number 3 that I'm going to be talking about in this video is being in debt. When people say there's good debt and bad debt, that is true, but all debt, at the end of the day, you have to pay back. So all debt is a liability. Why? Because every month you have to be paying down your debt. Doesn't matter if it's your credit cards, student loans, your home, you have to pay down your debt. So all debts in this case is a liability. Your money is being thrown away here, okay? Your money is being thrown away at your debt, your home, your car, okay? And all these things that your money is basically being taken out of your pocket. Money that you can't use to spend it on yourself or to invest or to save is a liability. So now let's jump into assets. Assets are anything that puts money inside your pocket. Assets are anything that gives you cash flow, gives you control, gives you the chance to save, to reinvest, invest, to buy new things. Okay, so number 1, let's just start with stocks. Stocks is a very good asset, especially high yield dividend stocks. Why? Because they'll be paying you dividends quarterly, monthly, yearly, okay? You'll be getting cash flow from your dividends, okay? And depending on how much you invest into stocks will depend on how much money you'll get back and through dividends, okay? Millionaires, they're billionaires that have stocks, and that's just an extra side of income that they are generating, that they are using to pay off their car. There are people that use their assets, your assets, to pay off their liabilities. That's how the wealthy stay wealthy, how the rich become wealthy, okay? The more assets you have, the more income you're gonna be generating to pay off your liabilities, okay? Warren Buffett makes billions of dollars every year. I'm pretty sure his stocks portfolio outweighs all of his liabilities, okay? Number 2, owning real estate. Okay, when I say owning real estate, I'm talking about rental properties, not your actual home. Okay, the difference between your home and a rental property is that your rental property is going to be generating cash flow every month. Okay, you're going to be gaining money here, and you're going to be losing money from your home. Okay, yes, you have a mortgage. Yes, you have debt when you have real estate. Okay, but you physically, you're not paying off the loans or the insurances. The tenant inside your real estate property, your rental property, is paying off your loan, your taxes, insurances, all those expenses are being paid off, and you're generating, let's say, $200, $300 every month of your income. That's your cash flow, okay? Again, the more cash flow you have, the more chance you have of becoming financially free. Asset number 3 that I'm gonna be talking about is owning a business, all right? So let's write that one down. Owning a business. When you own a business, you as the business owner have the potential and have the control to see how fast your money in your business could grow. This will also depend on how well you can manage your money. Owning a business is a really good test to see how well you manage your money as well, okay? If your business is generating $1 million a year, how much of that $1 million is actually profit or in expenses? That's how businesses also go into debt, and that's how businesses go bankrupt, and that's how businesses close down. You have to make sure your business generates enough cash flow, your business overall has enough assets, for example, like machinery, stuff to make sure the expense cost is lowered, and your asset and your money keeps on growing in your business. Same thing in finances, okay? The more assets you have in your personal level, the less money you're gonna be wasting on your liabilities, If that makes any sense? All right, so stocks, real estate, and business are my top three assets that anybody can have. And car, home, and debt are the top three liabilities that anybody can have, all right? So let's just take it one more step further and go into a little bit more depth to see how these specific formulas and how these assets and liabilities actually take into place. All right, guys, so when it comes to actually building up your asset or column, when you're building up your asset portfolio, you always have to know where your income is coming and how your expenses are leaving, okay? And a lot of people are getting confused, okay? So when your income is coming in, one of your incomes is obviously going to be one of your jobs, okay? Your jobs pay for your expenses like your mortgage, your car, and your debt. Let's say, okay? But if you only have one asset or only one stream of income, your job has to be paying for all these three things, okay? And that's basically how the lower and the middle class stay in the lower and middle class, okay? But if you have multiple streams of income, multiple assets or different types of assets, your liabilities, you know, they're not gonna mean too much because your assets will always pay for your expenses, okay? For example, now, let's change this. If we have real estate, like a real estate property, if we had stocks, okay, and if we had a business, okay, let's break it down a little bit further. Let's not even say your job is paying your mortgage, your car, your debt. Let's just say your real estate property pays off your mortgage. All right, you see what I'm getting at? Let's say your stocks pay off your car. And let's say your business slowly but surely pays off your debt, okay? So the extra income you have will be from your job. You'll still be generating a lot of income. If I have more assets or more stuff in my income column, it's obviously gonna outweigh my expenses, okay? Even if I had, let's say, even I have to pay health insurance, okay? Health insurance, you know, schools for the kid, or any other type of stuff that's taking money out of your pocket, the more assets you have, the more streams of income you have, the more cash flow you are generating, the less relevant your expenses will be, okay? And there is where a lot of people get confused because they think that just having a job could pay all these expenses off, okay? There's some people that have way more expenses than the normal people. They have to pay their TV bill. They have gym memberships they don't use. They have all these expenses and they continue to keep putting expenses in their expense column instead of putting stuff in their asset column. The more income you have, the more money you'll be generating. The more money you have, the more chances you have of becoming financially free. This is the formula, guys. Have more assets, more income streams than your liabilities, than your expenses. The more stuff, the more solid, the more solidified your income is, the more cash flow you're generating here, the more assets you have, your expenses don't mean nothing. Your job shouldn't be paying for your expenses. Your job should be an extra little income that you have. Your job should make sure you are saving and investing, okay? And there's gonna be some point where you're gonna quit your job because you have so many streams of income that there's no need for a job. You could do whatever you want. You could go to Hawaii, go on the beach, chill in the pool, okay? Sometimes a job's not necessary once you have so many assets, so many streams of income. A job's not necessary. Like Rich Dad Poor Dad said, a job stands for just over broke, all right? If you just have a job to make sure your expenses are paid off, you're not going in the right route. You are in the assets equal liabilities route. You're gonna stay stuck in the middle, all right? If you have more assets than your liabilities, obviously that equals financial freedom. So that's basic financial literacy, or how I like to call it, Money 101, all right? Hope this video could help you guys build up your asset portfolio, your asset column, and strengthen up your cash flow. And if this video did give you guys some sort of value, make sure you hit the like button, subscribe to the channel, guys. Until next time, have a great day.